Okay, so for the next part, let's simulate how accounting is done in JMA, just so you can get an appreciation to see the transactions that happen in the org, how it affects the accounting equation, so that hopefully maybe in the future you could go back to the equation whenever you're having a hard time accounting for the different things you have to account for in the org. So let's pretend we're accounting for an app project na party. Let's say Afterlife, the app project 4 years ago. So let's start with a fundraiser. So let's say the app sold shirts they sold shirts, shirt sale, and let's say they raised 100,000 from that from revenue. They collected all of it on time, and then the shirts cost them, let's say, 70,000 to produce overall. So let's say they sold out, for simplicity's sake. So basically what happened here was, in the revenue part, your cash increased by 100,000. So that cash, an asset, because that's a resource that you have to use, increased by 100,000. On the other side naman, since it's a revenue, it increases your equity. So as you can see, both sides of the accounting equation move. Revenues and expenses go under equity. When you get the net income, so that's basically revenue minus expenses, it goes into your equity. So whenever I talk about expenses or revenue, I'm talking about the equity side of the accounting equation. Then for the inventory, since it cost us 70,000, our cash decreased by 70,000 because we paid for it. So the assets decreased, and we incurred an expense of 70,000 because of the inventory we sold. So our equity goes down by 70,000. So the net effect from this transaction would be, our assets increased by 30K because of the cash left over, and our equity is increased by 30K. That's basically income that we have in our disposal. So next, let's say after that, we have a sponsor. So let's say Sunmig. They agreed to do a cash sponsorship, which probably will never happen, but let's just say it. And they gave 20K. But then out of that 20K, we only got 10K for now. So what basically happened here was, out of the 20K that was promised to us, only 10K was given. So our cash increases by 10,000 and our revenue increases by 10,000 also. In accrual accounting, the leftover 10,000 that has yet to be collected would increase our AR, as it is shown here, by 10K. And on the other side, after increasing AR by 10K, it would then increase our revenues also by 10K. Because again, it is money that is promised to us. It is something that we've already earned because they promised to give that to us. But since they haven't given it us yet, we have to put it under our AR. But since we're doing cash accounting, again, because for JMA, it doesn't really matter if you promise us cash. What matters to us is the cash is with us. So for our revenues, it does not increase with that 10K. It will only increase once it's actually given to us. Although for tracking purposes, we have to still track that per in to know that we are owed 10,000 from a sponsor. But just know in real life, that increased our revenue also by 10K, which is an example of when we have income that isn't tied to cash directly. So let's say we had an FB boost. Let's say we went all out with that. We paid 3K for that to boost our pub mats. Also had a photo shoot studio with the models. And let's say we went a bit over budget there. So let's say we went 15K because sometimes it happens that we go over budget. So next, let's say we need to pay down payment for venue, and then that's gonna cost us 30K. Now, if you see here, our cash on hand right now is only 22,000. Since we have to pay 30,000, we need to find a way to finance that, or else we're going to be in the red, or we're going to have to loan from JMA. So one way that we can do that is to create more fundraisers or to have this sponsor, they'll give their cash right away. Basically, what I'm trying to show here is that in deciding whether to incur more expenses, by knowing that, I only have 22K before paying this 30K, that means I'm going to run out of money soon. since I accounted for this properly, I'm able to know that I'm running out of cash and I need beef up my funding efforts if we're going to have to expend more for logistical stuff since we have only paid the down payment for venue. Otherwise, if we didn't account for this properly, let's say we didn't account for our FB boost because we thought, oh, it's just small, we're not gonna know. And we didn't account for the photo shoot yet because wala tamad. Yun, we're gonna think that we only have 48 because of the cash that came in. We might think that we have enough cash to pay for this, but in actuality, we don't have if you count the cash on hand. So again, it just goes back to the point that you need to account for things properly to know exactly where your position is in your project, to know how you can move forward. Since I know that I'm going to run out of cash after paying this, I need to ask San Miguel to remit if they can already. So let's say they remit it. And let's say we had a rummage sale that earned, let's make it a good rummage sale, 20K. So now we're back in a somewhat healthy amount of cash for your project. So now we know if we can afford to expend a bit more logistics wise, because now we have, in hindsight, it's pretty simple. I mean, cash in, cash out. If you don't have enough cash, don't buy. If you have enough cash, okay, you have enough to spend. But people tend to forget that we expend so much that we forget that there are other commitments that we have to pay for. And then that's where we tend to fall in our projects. So again, driving back the point that it's super important to account for all of your activities to know exactly where you stand. It might be a hassle at times, but it would save you a lot of time and would create better experience for your team if you exactly know how much money you have. Okay, next, let's say we got another sponsor, Globe, cash also, or fine, let's pick it X deals. And they gave 40K worth of X deals, Globe. So going back to what I was saying, in the real world, since we got X deals for free from an entity, we would have considered this part of our revenue. So it would have increased our revenues by 40K. But again, for us, for an organization, it doesn't really matter. Because at the end of the day, because you know those sponsors that will give like 100,000 worth of GCs, but it's pretty much useless. I mean, they say it's worth 100,000, but you can't really liquidate it, and it's useless for you when you fund your activities. So it will only mean revenue to us. It will only be important to us once we actually liquidate or sell the X deals. So let's say out of that 40K, we were able to sell them for half the price, so 20K. So it's only then that we will consider that part of our revenue. But yeah, in real life, that 40K would have been considered part of your income. Next, let's pay for the second half of venue, which was 30K. Let's say other lodge stuff. So like the DJ, the internal decor, whatnot, would cost, let's say, 40K. So let's say our supplier told us we can pay a little later. So since they told us that we can pay a little later, we're gonna create an account payable. And then our actual event happens. So we have ticket sales. And let's say we got around 70K worth of tickets. And then earned 70K. I mean, collected all 70K. And then at the end of the event, we were able to pay all of our launch stuff now. So dispersed 40K. So at the end of our project, we ended up having an income of 42K. So again, it's a super simple exercise, and I'm pretty sure it wasn't that difficult to follow. Again, it just has to drive the point that the entire project was basically summarized in this tracker. So we are able to see peso per peso what happened in the project, where all our money came from, and where it was expensed at, so that we will know moving forward. Let's say for the next app projects, what we can suggest to them to be more cost efficient, to gain more money. It's all about better decision making and knowing where your position is. Like for me, that's as an org, I think that's the biggest thing you need to know about accounting. Na talaga it's there to help you to know where you are at. Like back when I was systems chair, like these trackers, people would complain na, we had to put so much effort into it, na we're working for the trackers. Pero parang what I want to point out with accounting, it's more of like you want to make the trackers work for you. You want the numbers to work for you so you can use them to make better decisions and to execute your plans better. What I mentioned before, na classifying your expenses, that also entails asking the different teams, oh, this expense, is it yours? Is it lodge? Is it marketing? Is it creatives? Because like what you said, it's super important to also communicate what transactions have been occurring so you can actually understand what the transactions are for. Because you can't just tell the finance team, okay, we expensed this. You have to understand why we did, how much we actually expense, and in the future will we expense even more so that we can budget and foresee how much how much more money we'll be making. So it's also super important to communicate within your teams the financial position so that you can move a lot more smooth. Let's say this event expensed around, let's just say 100,000 in promo. I mean, that's never gonna happen, but let's just say that. But then at the end of the day, they only earned 15K. That kind of makes you realize that we did not use that 100K in promo efficiently. So maybe for the next time we do this event, we don't have to spend that much. So yeah, it really does give you an insight to what you can do for the future. If you don't have the cash, then you really are not getting any better in your position. You can't just be told, we'll pay you eventually. You need that cash now. It's better even for any company, you want the cash now, but more so for smaller organizations that need to be more liquid.